Hello traders and welcome to this live intraday strategy webinar. Today is Wednesday, October 5th. Good to be with you guys this morning. Kelly says, good morning, pal. Happy hump day. Same to you, Kelly. Eileen, always a pleasure. D, we'll talk about Kiwi. I like where you're at. Good morning to you as well. Conwall says, hi, Michael. Good morning. Awesome analysis on crude and silver. Yeah. Cheers on that, Conwall. The biggest surprise for me actually was gold yesterday, and that definitely broke some major key barriers. I do think there's support upcoming. We'll talk about the gold trade as well. I know, Conwall, you've been following that, but big break yesterday, right? And the same side breakout in crude. So we'll review those. We did get the release of ADP employment. Came out earlier this morning. I tweeted it on SB Squawk. Came out at 154 or 154,000. So the expectation was 165, slightly below expectations. You did get a slight downward revision to the previous month as well. Trade deficit also coming in a little bit larger than expected. So precursor for the NFP report, I don't know. I don't really like equating them like that. And as we always like to mention, ADP is notorious for missing those larger swings in non-farm payrolls. Obviously, they'll tend to move together, ADP being the private sector read. But there have been instances in history where you've seen those larger swings in non-farm payrolls not show up in the ADP figures. So we want to be cautious about using that as sort of a gauge of what we should be expecting on Friday. Looking later in the session, you do still get the ISM non-manufacturing composite. Keep that in mind. We are expecting a nice uptick there from 51 to 53.0. Remember, anything above 50 indicates expansion, anything sub 50 contraction, so a stronger build from the previous month there. And then durable goods orders. This is the final read for August, so it's not really expected to be a major market mover unless we get any major revisions to last month's data. As it stands right now, for non-farm payrolls, markets are calling for 174,000, unemployment widely expected to hold at 4.9%. Okay, so the event risk still building up to Friday's highly anticipated number. And we're pretty quiet tomorrow. I don't really think you have anything on tomorrow that you'd want to worry about as far as event risk, but keep that in mind as we close out the first week of October trade here. All right, as it stands, here's what the dollar looks like heading into the U.S. session. You do have a split performance here. Swiss franc with a rally of 0.23%. Not really following that trade, but here's the Aussie with a bounce of 0.1. Still looking lower in Aussie near term. Did offer a nice short opportunity in overnight trade. We'll go over that. Euro, CAD with a slight advance. Biggest loser on the session, Kiwi dollar, down 0.17%. I know D's on the short side of that trade. D, it is coming into a longer-term structural support. It is just a former median line resistance, which is offering, I think, a little bit of a bounce. But I do still like Kiwi lower, so we will go over that promptly. Okay, so on the list for today, Kiwi, Aussie, Euro, Yen, dollar CAD. I was messing with that last night. I took a break even the rest of that trade. Sterling, dollar yen, euro dollar, and then obviously we'll cover the gold and crude levels. Anything else you guys want to cover? Any other trade setups or specific questions? As always, feel free to drop it on the message board. Matt says euro pound. Yeah, sure. We can take a look at euro pound. Let me write that down. Conwall wants to add silver to that list. We were following that yesterday. And Wes wants to look at euro Oz. Okay. All right, got our work cut out for us. Let's get started. Here we go. So the dollar index, just before we get started, I noted this in yesterday's report, and I kind of just wanted to bring it up once more. You know, these are the kind of things that myself and Jamie always like to look at. I'm more favoring keeping a focus right now on the dollar index on the Dixie side, which is the ICE dollar index versus the Dow Jones FXCM dollar index. A very interesting phenomena happens. And when you see this, it kind of is sometimes a precursor. And the major thing you're looking at is the ICE dollar index is very heavily weighted the euro, okay, about 57% to be precise. And the fact that the ICE dollar index kicked into a new fresh monthly high from September's high, while the euro dollar did not break the September low, typically is an indication of, or these types of events typically a company turns in market price. Now, you don't know which one is lying, right? It could be that the break, the push lower in euro is still pending. But the point being is that the high that was made, the one that did push the high was the dollar, pulled off, while the euro couldn't make a break of the low. That indicates to me that the dollar might be lying, okay? And going back specifically to the ICE dollar index. So still cautious. I still think the dollar could turn around. You would need to get back below the 200-day moving average, about 95.91 right now, to sort of validate near-term reversal. But I'm cautious about this dollar play. If you look at the Dow Jones FXCM dollar index, that did close and break above key resistance at 12,014, 12,018. If this holds this level today, that would be a constructive play for the Dow Jones index. Okay, now remember, at its inception, this was an equally weighted euro, Aussie, sterling, yen, just the four most widely traded currencies versus the greenback. But I'm still cautious here. I'm still cautious here that there could be something afoot in this dollar pull higher. Heading into non-farm payrolls, it's something to take focus on. But for me, near term, I'm still watching the ICE dollar index with that failure to push through last month's highs, and specifically the 618 retracement of that decline from the July high. All right, so that's sort of my thought process here with the dollar. Not surprised to see the index acting this way. We do have conflicting biases, and this is something I just want to address as well. A lot of people are saying, well, Mike, if you're looking for Kiwi dollar lower, that's dollar strength. How are you looking for a possible euro rebound? And we don't want to match our biases carte blanche to what the index is doing, right? So this is why, because we're getting these divergences in some of the dollar crosses, not really too surprised to see the index doing what it's doing. But if we take into account that ICE dollar index, it tells us something's amiss here, something's afoot, and we want to be cautious about jumping on board on a blank dollar bull type of trade. Still looking for weakness. All right, so that's just a quick overview in the dollar. Any questions? Even though we can't trade this stateside, or unless you're trading futures here for the ICE dollar index, a good indication just to keep a broader look at what the base dollar move is doing. All right, so with that in mind, let's jump into yesterday's setups. Would also like to see a huge breakout in Euro Key D. Let me write that down. I think we checked that out, right? Last couple of days. Yeah, we'll get an update on that too. All right, so that's number one for the dollar indices. Let's jump into yesterday's update, which started off with the Kiwi dollar. So D, the structural trend line I'm talking to you about is this one right here in gray. Now, I just want to zoom this out for you to tell you kind of a reference point. This is using the highs from 2011, the lows from that same year, and the subsequent high from 2014. Don't want to stress it so much, but you can see that the broader slope here has offered some nice pivots in price. And last night, or earlier today, it literally almost caught that to the pip. Now, just lowers the 618 retracement of the advance from that July low. That's 71.55. Okay, the targets are pretty clear. So you have 71.55, the 100-day moving average comes in at 71.40, really close up. More importantly, 71.18 would be two equal legs off that high. We did post an outside day reversal off resistance yesterday, as I noted in the report. That's clearly bearish. In fact, now that you talk about it, Aussie did the same thing, although not quite into resistance, but it did the same thing with that outside day reversal. And these are typically things we want to pay attention to. But I think the trade here is better off for the Kiwi just on account of the break that we've made. Again, Aussie still broadly holding those late month lows from last month. Kiwi, on the other hand, has already cleared the August lows. Okay, so I am liking the favor. I continue to favor the short side for Kiwi. From here, I do think you get a bounce. I'm looking for re-entry. Here's what we look like now, and here's what we look like last night. Okay, so near-term resistance we cited at 72.17, 72.14. Still liking the downside, looking for a tag of that median line. or basic channel support. Then you got that 618 confluence, like I noted on the daily chart, down at 71.54, 71.53. So you'd be looking for a rebound, short triggers in this region. If you get a rally in U.S. trade, the broader bias remains weighted to the downside while below this basic channel resistance. Okay, really clean. So not too surprised to see some support here, maybe another stretch higher on a real near-term approach. Again, if you just highlight this week's range so far, a basic 38.2 takes you into that region. Again, bearish invalidation comes in line with the 618 retracement, that basic slope resistance. All right. So D, if you're looking for a longer term position, what would be the stop loss if short at 72.20, says Wes. So Wes, we're going to want to see what price action does, right? I want to see a probe into this, a pullback, then a rally to get me short again against that high. You don't want to take it on the initial approach because you don't know if it's going to blast right through this or if it's going to just tag and bounce. So you need to wait for the test, the pullback. Again, the market will go back test. It might not make it all the way high, but your stop would be against that swing high. We want to see an initial reaction there. If it plows through, like I said, this is 72.54, my bearish invalidation level, and also a point of entry possibly. It's the objective weekly opening range low, and it's that channel resistance. So anytime we look to sell a rally, Wes, that's always the way we want to do it, man. Wait for the exchange rate to test that, pull back, and on the secondary bounce, that's where you want to take the short against the high. An example would be right here early in the week. We cited on Sunday, a short bias below that 72.95 level. Again, on the initial approach, where the heck are you going to put your stop on this, right? It plowed right through initially. So you wait for the pullback, the market goes back to test, you enter a short against that high, really tight stop, looking for the low. Now on a trade like this where it plows through and you're looking for re-entry, you might not get the opportunity to get in, and this is why I'm not short right now. You didn't get the zoom in retest. It just broke, initial test, and just broke down again. So that would have been a hard one to get into. Does that make sense? Does that help? He says, okay, clear now. Right on. Cool. Good question, though. Okay, so I haven't been able to get into the Kiwi. I hope to do so if we get a decent pullback today. Again, next barrier of entry, if we clear 71.50, 71.18, 71.19 would be that 100 off the high. And again, a little bit more of a critical point from a Fibonacci standpoint. Pretty decent. As I said yesterday, the yen and the Kiwi are pretty much, as odd as that sounds for me, the ones that I'm focused on the most. Dollar CAD was kind of a stab yesterday at resistance. We did squeeze out a good 30 pips on that, but these are really the ones I think that are offering a little bit more clarity on the intraday move. D says, got it. Thanks. You're more than welcome, D. All right. So that is Kiwi dollar, number 2. Any other questions on Kiwi before we move off? Look for a near-term rebound, by the way, from here. It does look vulnerable. You got some divergence all up into those lows in overnight. You broke the Asia highs just right now, so I wouldn't be, or the European highs rather, so I wouldn't be surprised to see that rally. Again, look for short triggers on the way up to 72.17, 72.15. Moving right along, Aussie dollar looks like this. Here's our good friend, the Aussie. Really clean setup. Again, the daily chart with that outside day reversal taking us right into support. The level to beat, as I noted yesterday, was 76.10. As you guys recall, the Sunday update cited that as our near-term bullish invalidation level. So really, this is the break you need to see to get the downside going here. Yesterday did break below the monthly open. It's been holding these median lines very nicely. Okay, again, here's what it looked like last night. Here's what it looks like today. I mean, this is ping pong status right here. Boom, right into the September high day close, right back into the 38.2. Another rebound right now. Still looking lower. Ideally, in an ideal scenario, this thing drops and settles into 75.70, 75.73 and then rips face. That would be two equal legs down off the high. It's also a really nice pivot in price, as you can see right here. It also coincides nicely, if I zoom this out to a 2-hour chart, with these parallels that we've been following for some time. So still looking lower. Would like to see long triggers materialize off this region. The bullish invalidation level, or the broader major key support, is at 75.45, and that's the 618, a little bit bigger of a median line crossing. So that's my thought process here on the Aussie. I still think you look lower. I don't want to get too aggressive on this because broadly I want to buy the pullback. It's just near term. It still looks like it wants to make that low. And not just that, the rally off the base from last month. So here's, again, remember, the cleanest of all the dollar crosses is the Aussie with regards to the broader daily formation here that we've been following for months and months and months, right? Resistance, support, resistance, same slope, support, same slope. And here we go, kind of in consolidation for the last few months. But what I did want to note is, looking at the rally off the base from last month, looks like a 1, 2, 3, 4, 5, really clean 5-wave impulse rally. So it would give us the suggestion that the near-term pullback should be correctionary in nature, and that's why it has that 100% extension down here, 75.70, sort of an area of interest for me. Okay, so the immediate focus is looking lower below the monthly open at 76.53. With target down at 75.70, and again, both of these areas of interest for possible exhaustion, long triggers to the upside. So just as a disclaimer, I haven't taken anything on Aussie yet. There was a beautiful short opportunity if you were awake last night. Again, I was, or rather, on the rally that you saw last night in September high day close, came right into it. You got a quick failure in momentum, even the near-term charts, before it quickly broke down. Let me show you that on the Aussie. And here's that rally yesterday. Okay, so as you rallied right into September high day close, boom, came right into basically the exact level. What was the level exactly? 76.41. Okay, pullback. You don't know if it's going to be the last, if that's the probe or not, but we've collapsed below 70. Okay, that in and of itself is a short trigger, but you don't know, right? Still too tight to call. Pullback, and on the secondary rebound, look what momentum's doing. Failure at 60. Quick stop against the highs. You're looking for about 19 pips per scalp on the Aussie. So it was a really nice opportunity to take another short there last night, again, targeting that same key support. So we'll continue to favor these levels. Been working very clean. Moving forward, see if we can't get that deeper cut in Aussie to inevitably look to get back on the long side there. Questions on Aussie? Watch those median lines on the short term. Okay, next up on tap, Euro Yen. It's number 4. Here's what Euro Yen looks like. So another one where it's getting away from us. It kind of rallied and ripped. We've been looking to try to get on the long side of the trade, but again, I can't really advocate chasing this, guys. And now we're coming into an area of a little bit more critical resistance, and that's 116.03, 116 handle. That's basically a longer dated 618 retracement from the decline off the highs that you made there in July. You also have slope resistance extending back to the 2016 high, converging on that region, and that's this level right here. Also note that the previous highs that you made here on a swing high in early July also sort of capped that advance. So either way you look at it, Euro Yen's coming into an area of resistance. Expect some weakness, but hopefully that'll give us an opportunity to get back on the long side. So, excuse me one sec. Still not quite over my cough, but getting better. So looking at this on the 30-minute chart or on the hourly, let me bring that in. Well, actually, let me take a step back. The daily chart, I guess, will be a little bit more telling. This is the same chart we've been following for Euro Yen for a couple of months. The consolidation structure that we've been in. Look, whether you want to count as a break or not, I was initially working with this slope, and that broke yesterday, giving us the upside stretch. If we take it to the actual high you made on the 14th, either way you're breaking. But the point being is this. This is the major slope that I'll be focused on a little bit more. Basic trendline resistance off the yearly highs. And that coincides, like I said, with that 618. So that's sort of your breakout level, okay? It's backed very closely at 1666 by the high day close there. And that's the high day close post-Brexit. So since the Brexit low, that was the highest day that you made, or the highest mark in price that was registered. So that's another barrier at 1660, but it's a healthy range, right? So it's still something we want to focus on. Here's your monthly open. And that's last month's high. So you kind of get where I'm going here, where I like the long side. Really, really tricky here. You're coming in some resistance. It could offer a pullback, which is what we would want to see to get back in. But if it plows through, you know the levels to look for. Here's what it looks like on the hourly. So here's the slope that we've been following since last week. I think someone here in the webinar was asking about it. This was the break that really changed things for me at 114.74. So again, there's that near-term slope that we were looking at in the daily chart. We got that last night. Here's the upper median line parallel catching the highs. And there's that 50 line. Really nice support. I mean, you don't get setups that are quite this clean. So if you're watching this really, really close and near term, you can feel free to sort of trade this range very well. But I would say, again, the long side's vulnerable heading into 116.03. I would expect a little bit more of a kickback from that region. With the same respect, a breach would probably see accelerated gains. I wouldn't imagine that we would get an opportunity to get in if it just breaks higher from here. So ideal scenario, you look for the pullback, try to get in as close as you can to the median line. We'll stay constructive near term while above 114.70. And the only thing that would shift our attention to the short side would be a downside break of the formation. So I'm not really looking to take any short exposure per se here on Euro Yen. More so, I'd be looking for a pullback to get back in. Any questions on Euro Yen? Rally got away from us here a little bit. I wish I would have had a little bit more of a heads up to try to get in. I mean, the obvious, hindsight's always 2020, but the obvious kind of pullback snap buy would have been here yesterday. But as I said, wait for the pullback here. You're getting some divergence in momentum, albeit above 70, which is a weak signal. But I would be looking to buy a pullback here in Euro Yen. Still matches with the broader Yen story. Any questions on Euro Yen? All right, and that was number 4. Number 5 is dollar CAD. Here's what dollar CAD looked like last night. And here's what dollar CAD looks like right now. So, that was another opportunity. Gosh darn it, to get back in the short side. Dollar CAD, remember this slope that we added last week? Wasn't too sure that we were going to actually see too much play off it, but yesterday in U.S. trade, that stab into 132.15, which actually completed an exact 100% extension, 2 equal legs off the low from last week, also converged on that parallel. So I thought, it was worth for me taking a shot in at a stab for that short. I got 30 pips on the way down. We took the stop on break even on the rest of the trade, looking for another reentry here into this open of U.S. trade. I think we kind of just missed that right now. Again, divergence into the highs marks well for that downside bias. Here's what it looks like on the daily chart. It's a messy trade, and this is why I didn't want to really highlight this chart yesterday, because look, I mean, at the end of the day, the factors I'm looking at are this. You've had multiple failed run attempts at the 200-day moving average. The August high day close still remains intact on a close basis for the rally that we made off of that last swing low last month. You have the median line, which has been in play, not very clean, but also just above that region. So if the dollar is breaking down and you had some divergence into the highs, here's your trigger on the daily chart, and this would be the level to turn from. Now, you never know. You never have conviction that the market's going to turn. So you always want to be very cautious. We're playing these types of reversal trades. And as I said, I have no problem, taking break-even stops all day long. But I won't take a firm stance or an approach on a trade like this until we get a little bit more validation, which, for the record, we don't have yet. But that being said, here's what the trade looks like right now. So if we take a basic trendline resistance off the highs, that got tagged to the pip on this outside candle here for this hourly chart. So an outside reversal off of trendline resistance, that's bearish for me. Okay. If we take another stance sort of here, it's another trigger you're looking for right now. Okay. Just to give you, again, I've been getting a lot of feedback that you guys find this helpful on my entries. Here's what dollar CAD looked like yesterday. Kind of just walk you through the process here. So again, Wes, when we're talking about stops, right, and trading into resistance, this is sort of how you want to sort of look at it. I'll tell you exactly where my thought process was here. Okay, first off, right off the bat, when you're looking at this, oops, sorry about that. Too many charts open. When you're looking at this from a near-term standpoint, my favorite types of divergences, guys, are not when you see peaks like this. They're when the immediate advance on the near-term chart makes two equal peaks like this, or one higher high, and then the oscillator instantly makes a very near-term lower high. That's pinpointing. This is going to reset every time a new candle comes, but those tend to pinpoint reversals very nicely. And when these types of momentum indicators start to reveal themselves at resistance, which is where dollar CAD was, those for me tend to be really nice trades. Okay, so on a trade like this, you're looking with a 28 pip ATR. I had a really tight pip stop right against 32.20, and we're looking for about 28 pips. So on the decline into the U.S. close, I saw a little bit of a rebound here, and I just lightened the load. I was a little bit heavier on the leverage here, so I just lightened the load a little bit heading into Asia. Asia, again, at this point, by the way, I've only taken 15 pips or 14 pips, but my stops are at break even. You see that? So on this rally, I almost got stopped out again, but market continued. If I would have gotten stopped out, no problem. 14 pips in my pocket, no stop, no loss. I'll take that any day. But that's how I want to play these turns. Okay, never want to get stubborn and really put the stop away, especially when you're taking a stab like this. So as we were watching the debate last night, I kind of just peeled off a little more. As the trade continued to approach those former highs, I continued to reduce leverage. Went to bed, stops at break even on the rally. The rest of the trade got taken out. No problem. That just gives me an opportunity to look for new shorts, right? And that's the strength of the strategy. Why? Because if we had gotten this, if we had caught this a little bit earlier in the session today, guys, there's the trigger. You can tell I was looking at it already. If we had caught this earlier, now this same range has offered two separate trades of which we've been able to take 30 pips, 30 pips. We've doubled up on that same range. That's how you want to use this strategy, which is why the break-even stop, for me, is invaluable. Because I got no problem. I already took a little bit on this stretch. If I got stopped at break-even, I still like to trade, no problem. I'll jump right back in, right? But so I hope that offers some color, guys, and some of you who are trying to get a little bit more acclimated with these near-term entries. That was a nice entry right there. Obviously, At this point, you don't want to jump in this late in the game, but if the U.S. Open rallies and you see another stretch into 32.25 or thereabouts, look for new short triggers. At the end of the day, like I said earlier, this is going to be our bearish invalidation level. So if we pop through this, I don't really have anything until 32.50, 32.95, a swing high from back in March. And further on up, but as long as we stay below this, I do think that the risk remains lower for dollar CAD. Okay, downside targets, again, look for that same target we hit last night, 31.70, 31.75, 31.50, or 31.47, 31.40. This region's a really nice pivot in price for the last couple of weeks. And then obviously the monthly open comes in just lower, right around 31.20. And let me just adjust this extension to that new high. There we go. So feel free to take a snapshot of this chart and let me know if you have any questions on that. Trevor, that is awesome insight. Thank you. You're more than welcome, Trevor. Yeah, I do these drills as often as I can. Whether the trade works out or not, I'll walk you through it. I got nothing to hide there. Dollar yen is next. Actually, I'm sorry. Sterling yen is next. Sterling yen. That was on the 10-4 update. Any other questions on dollar CAD before we move off? Okay. It looks like we're going to get that breakdown anyhow. It's just too far out right now to try to take a short, so we'll see what the U.S. Open looks like again. British pound. Here's what sterling looks like. So, kept on breaking down, and I feel like a broken record, but I'm coming into an area of which I might be interested in, again, looking at possible support for the pound. Here's what sterling looked like earlier in the week. It's holding this channel exceptionally nice. It's just that I was looking for that 127.97 level to offer a little bit more of a support. We plowed right through. You didn't even get a fake out, so you couldn't have even gotten tempted for long exposure here. It kind of just collapsed. Same thing with all-day trade yesterday. I was looking for this thing to possibly find some support here as we were talking in the webinar, remember? It didn't, and it kept on dropping, turning just ahead of basic channel or slope support. Remember this long-term trend line? That's this right here. We're talking about these trend lines yesterday in the webinar. Do you remember? It's exactly what caught the low. Sick. So, look, momentum's at 30. It's a good place to turn if it's going to turn. A trade like this, you don't want to be a hero. You don't want to sit here and try to just take the bid and hope that it rallies. Momentum is at support. Price is at structural support, but there's no validation of any type of turn here just yet. Okay, you have a trigger in momentum I'd be watching for a longer term sort of shift in momentum. That being said, near-term price action for me is starting to look at least like you got a really nice rejection of that, and you got to clear at least the Asia highs here at 127.45, 127.50 to get some sort of breakout type play. Divergence into the lows does bode well for that trade idea. A former resistance trigger which broke, acted as support, and now you're seeing a rebound higher, does also suggest you may be seeing momentum turn here. But there's just no triggers in it for me to actually prompt any near-term price action. So for the pound, look, I'm looking for the bounce. I want to see price action get a little bit more constructive before I would start to take a stab at it. I actually would prefer playing it through pound yen just on account of what we're seeing with the yen crosses. But you know, it's a losing trade here as far as trying to fade the weakness just yet. If we see some constructive price action start to base off of that low, it might be worth a stab near term. Still going to put this on the radar chart for now. But no change to the levels from that 10.4 update, guys. So all those, or the 10.3 update rather, all those levels remain unchanged. Questions on pound? And that was number 6. Let's go to dollar yen, number 7. Here's what dollar yen looked like earlier in the week. And here's what dollar yen looks like now. Okay. So another trade that has been, it's pretty much the same setup that you're looking at with euro yen. This one actually did give us a couple of opportunities to get in. And those were using opening ranges for each session, guys. The opening range for Asia actually offered a nice break here yesterday. The opening range again for London just broke. I wouldn't want to buy though, just because again, we're at the highs for the month. We're at fresh highs, and I don't really want to chase this from this level. Dollar index also at resistance. There's just too much for me to kind of just want to jump on the long dollar side here. Looking for the setback, again, near-term support right with the median line. You want to stay constructive on dollar yen, even if this thing corrects down to 102. That was the swing low that we launched up on this last advance right here. Nice pivot in price, the lower parallel, and former median line, which we broke through, now support. Okay, looking for the setback in dollar yen to get back long. I don't really have much pending on a near-term play here for dollar yen just yet, but the levels remain pretty clear. If you're holding a long exposure, I would still be looking for a final stretch into 103.50, but near term, it might be a region of which you want to just peel off some positioning. Look at the momentum signature here; does show some stronger divergence in price action on this last rally. So you could see an exhaustion pullback before you continue higher. If you look at this from the daily standpoint, there's that 103.50 level, really nice, and also represents last month's open just ahead of that. There's the media line for the longer term structure. And it's backed very closely at 103.68 by that 100-day moving average right here. So big region for dollar yen coming up, a little bit higher from where we are right now. Remember, this is going to be, I think yesterday completed 6. 3, 4, 5, yeah, 6. This is going to be the 7th consecutive day of advances. Let's see when the last time dollar yen did that. So yesterday was 6. That's already pushing an advance we haven't seen since back here. I got a little bit of a setback, sat in a range for a week before he continued higher. So broadly continuation pattern. Let's go before that. Was back here. Same deal. 6-day advance. You saw a range hold for a good 3-4 days. Continuation. So again, a continuation pattern. Just going to highlight these. Okay. Prior to that was right here. That was a null, didn't work there. Although that wasn't within the confines of a strong uptrend to begin with. So it's a different condition from where we are now. And even further back, you look here, again, similar type scenario. You had a little break. That was a 7-day stretch. A little bit larger of a break. This lasted for about 2 weeks before you continued higher. But you can see this kind of analysis just sometimes can be helpful in trying to ascertain, where are we? And specifically when you look at this in combination with momentum, you say, all right, well, the last, 3 out of the last 4 times that we saw a 6-day stretch to the upside, you saw, a couple of days of consolidation, a couple of days of sideways movement before extending higher, Could be what we're doing now. Maybe you sit here sideways for a couple more days and then you break higher. Point being, I would just be cautious about getting too excited about favoring further dollar yen longs from these levels. Okay, still like the bias. If you get the pullback, let's get back in. But near term, might be getting a little tired here. So I'd be looking for a stretch into 103.54, maybe a decent pullback from there, stay constructive above 102. Any question on dollar yen before we move off? Okay, so all of these targets remain the same, unchanged from that Sunday update. We've taken out all of them. 103.54 is the last one that you're kind of waiting on right here. All right, so that's dollar yen. Number 7, Trevor, is crude on the list, Mike? It is. You got it. We're going to get through the euro, and then we'll jump into some of the commodities for sure. Okay, Trev? Let me just get through the euro. I just want to touch base on this because the euro dollar has set a very impressive and well-defined weekly opening range just below the monthly open. That's the only thing I'm looking at right now. I favor a euro dollar breakout to the upside. If you take a look at the euro daily chart, again, we talked about this earlier in the webinar with regards to the fact that this failed to push a new low while the index on the dollar DXY pushed into a new high, would suggest that the dollar push to the highs is the false break. And that would suggest that the euro dollar may in fact make a topside break. I don't know. We're in the consolidation pattern until we're not. I hate to use these metaphors and, sort of textbook sayings, but it's true. So you have the weekly opening range, stay objective. You have the weekly opening range taking shape just below the monthly open, which is just below the high day close from last month, 112.55 being the breakout zone for me. Support, he stretched into the exact 50 of the Brexit low, literally. 111.39, the low from yesterday. 111.37 fractional 9. Okay, so let's get as close as we get. So you have a very clear-cut range. If we top 1258, love it. Looking for 113.18, looking for 113.47, a little bit more of a key barrier of resistance up here. But that being said, a break below 111.40, and I'm not touching this thing because things could fall apart really quick at that point. The last saving grace would be this region right here, 110.75 into 110.85. But, if we break there, I wouldn't even play a short. I'm just going to sit on the sidelines and see if we get a reaction down at the reversal day. So, Mike, this is all good and dandy from the broader term, but what do we do near term? Look, near term, there's not much of a play here, which is why I haven't really been pointing you in this direction. If you feel like playing the range and you get some decent signals at resistance for the weekly opening range highs, sure. If you get some decent long triggers is what I'd be preferring on a pullback into the weekly opening range low, that's something I might be interested in. I think there's more juice for your dollar elsewhere. Kiwi would be one, CAD would be one even. Getting involved with the euro yen on a stretch higher, in my opinion, would be, or a pullback for a long would be a little bit better of a play here. But I'm cautious. Remember, you have non-farm payrolls on tap on Friday. And I think with the opening range for the month being so tight, you're likely to see that break offer some moves. Remember, last quarter was one of the tightest euro dollar ranges in history, right? So these levels of exceptionally low volatility typically precede levels of massive upsurges in volatility. So things can change relatively quickly. The euro has been in a ridiculously tight range, and I do think we get a resolution to that range here heading into the early part of October. So don't take too aggressive a stance on the euro just yet. I still do favor buying dips for the long side there. Specifically, 1255 is the level we need to clear to validate that upside bias. Questions on euro? Going once, going twice. All right. So let's jump into some of the commodities here. We got about 15 minutes left. Gold, crude, silver. I got a question on euro pound, euro Oz, and euro key. You guys love the euro today. So let's do the commodity block first. Here's what gold looks like. And this was the biggest surpriser for me yesterday. I really Obviously, it broke below our bullish invalidation level. So Conwells we've been following, this was kind of a big break, 1215. 1302 was another major key support. And this thing just collapsed through a whole lot of major key levels. The 50% was also converging on the lower parallel there. And like we always note, guys, the downside break of a descending formation can oftentimes be the sharpest part of a move. Just like on an upside formation, the breakthrough resistance of an uptrend can be the sharpest part of the rally. So certainly this is an occasion where you saw that exactly manifest itself. And there's the break downside running right into the 618 retracement, 1266. In fact, if you look at the near-term chart that we set up together here in the webinar yesterday, in fact, there's that lower parallel for that near-term formation just off the recent highs. This also ends up being an exact 1618 extension of the decline here. 1266, same as the 618 retracement from the ascent off the lows in May. So look, as long as you stay below 1290, 1287, this thing's at risk for a deeper drop. An area of which I'd be looking for support next is actually 1257. Peep this with me real quick. So if you guys recall, way back last year, we were working with this slope. And it actually was pretty fruitful for a very long time. Okay, you can see the 50 line offered some nice pivots in price once we plowed through the median line, and you take a slope of this same, it caught those two highs, right? And there was some decent play off this slope. The median line caught the lows exactly there in May. What I wanted to highlight is that same median line now coincides dead on with the 200-day moving average. Okay, we haven't seen a touch of the 200-day moving average since the initial breakout that we saw in February. And in general, we've gotten a lot of play off that 200, right? So it's something I'm looking at as a possible area of near-term support for gold. That being said, immediate support right now is at 1266, where we just rebounded off of last night. So I know this chart's a little bit messy here. I don't want to leave this median line on. I just wanted to highlight that for you. In fact, we could probably just keep the median line in there for you to keep that highlighted. Get rid of the 52. Any question on gold? Pound yen we haven't covered, Mark. If we have time, I'll squeeze that in for you. No worries. Any questions on gold? All right, so let's watch that last-ditch effort support here down at 12. I guess it's 1258 at this point for that 200-day moving average. So that is number 9. Let's jump into crude, number 10. Here's what oil looks like. Breakout, breakout, breakout. And certainly we've cleared this formation. It could have larger implications for crude. This is the formation we've been following, okay, since 2015, since the highs that we made. Really nice median line action all across the board. If this is to be a true break and we close the week above this level, you've got to look higher towards that 5250 region, in my opinion. One thing I want to do real quick, guys, is just, I know I was on gold just a second ago. Here's what the gold weekly chart looks like. And this is a really good opportunity to kind of take a broader view back. This was the chart that I published with the daily FX forecast for, the fourth quarter. The level we just broke, 1302, is pretty big. And while, we could find that support at the 200-day moving average, looking at this from a longer-term, multi-year type of approach, you could see this thing drop as low as 1220, 1210. And that wouldn't be outside the realm of this still advance off the lows. So keep that in mind. I just want to always take a broader view back. Bringing it back to crude, this is a breakout, again, that could have longer term implications for sure. If we take a basic, I haven't done this yet, but let me just see what this looks like. Could be something to consider. I think it's a little too steep for my liking, but could be something to consider nonetheless. Let's leave that like that for now. On a closed basis, it's actually a pretty decent fit. Key support at this point for crude is right back here. 4 more high day close. I'm not going to really want to pay attention to this retracement any longer. We've cleared that high. Leave that there. 786 is getting cleared now. And the 2016 high day close comes in right here. Okay, so essentially your next target is the 2016 high day close at 50.41. Specifically that June 9th close, which was the high day reversal close for the year. Key support now, back at 47.30. Here's what that chart looked like that we threw together last. I haven't updated this. Last week we threw this together, but there was this sort of breakout major key resistance we highlighted, right? Ever since it went through, this thing's just been taking out targets like no one's business. So we haven't updated the scalp chart to reflect any fresh targets from here. Just keeping in mind that high day reversal close for the year. I think these are the only levels you really need Conwall moving forward. The actual high comes in at 51.60. The high day close at 50.41. Key support 47.30 into like 47.80. I'd give this whole region. Keep in mind the monthly open is actually is 48 right on the dot right here. All right. Any questions here on crude? And it's interesting the divergence you're seeing right on the comp block. It's quite interesting. Certainly if the dollar does turn over, that would materialize really nicely, help crude rally even further, which may put a bottom under gold rather. So this is why I think heading into the beginning of the month, heading into non-farm payrolls, price action specifically over the next 4 or 5 days into the start of next week is likely to be pretty critical for a lot of these trades. Because if the dollar correction does materialize, again, that would give us a little bit more conviction on the upside for oil, may also start to put a floor under that decline in gold. All right, so that's number 10. Next up on tap is silver. It's number 11. Here's what silver looks like. Similar price action to what we saw in gold. I do have a little bit more of a critical support, a little bit lower down from where we are right now, Conwall. So that takes me to 1740. It's actually a pretty decent level. It's an exact 100% extension of the decline off of the yearly high. And it's also the exact 50% retracement of the ascent from last year's low. So I love these Fibonacci confluences. They tend to be, of my favorite plays. Also add to that basic trendline support coming off the lows. And like we noted earlier in the week, the 200-day moving average coming in just lower in time. If this does stretch into, next week, later in October trade, you'd be looking for that 200-day moving average to also converge onto this region. But a similar picture to gold here. I do think you can get a little bit deeper of a cut before you start to rebound higher. Pretty decent slope here too. Conwall, questions on silver. Here's that level we put together yesterday, or just the slope that we kind of looked at together. Obviously, we continue to hold below that slope that we just broke that offered clear resistance. The downside target 1827 did get taken out, but now we've cleared the entire slope lower. So I'll watch this as resistance, but I really don't want to stress this too much at this point. And I would bring up essentially your bearish invalidation level sort of to here. The swing lows from earlier. This is last month's open. You see here in purple. it's also just the median line off the high, which has gotten really clean touches, resistance, resistance, support, support, resistance, and so forth. All right. Okay, 5 minutes left. I hope that offers some help. Let me know if you have any other questions on silver Comwall. I do want to touch base on some of your questions here. Euro pound, I don't follow on an intraday basis, but here's what I'm looking at. Euro pound, euro pound. So, oh, we talked about this. It did take out that target. What level was that? That was the 2013 highs. Yeah, I mean, this is a long-term trade any way you look at it. Remember, we cited a constructive bias while above this region. Nothing's changed. You still want to stay constructive, basically above 87. It's near-term support. That was a big region that we broke through. Really, really big from my standpoint. You know, 618 retracement, a 100% extension, trend line or slope resistance, you name it. And again, this is kind of a pair that you need to look at on a weekly basis to get any type of visual acuteness to where you are in trend. So yeah, I would say you're at risk for a pullback while below this region. Look for 87 at support. A breach higher. I really don't have any near-term targets. Who was asking about euro pound? Matt, he's saying, so a head and shoulders pattern is off the table. Where do you see a head and shoulders here? What time frame are you talking about? If you're talking about this, yeah, it's 100% off the table now. Remember, guys, yeah, you saw it before the breakout. Matt, I don't mean to pick on you, brother, but this is the biggest mistake people make with candlestick formations, okay? The head and shoulders type of mentality play doesn't even materialize. It shouldn't even come into your mind until you see this break. That's the head and shoulders break. That's the neckline. Anything ahead of this is nothing, right? Is nothing. And this is why people oftentimes get caught in, well, I thought it was an inverse head and shoulders. I thought you can't front run a head and shoulders. The only way to effectively run a head and shoulders is to actually see a break of the neckline, then sell, just like we talked about selling to resistance. Wait for the pullback, sell against that neckline, and look for the measured move. Same thing with double tops and double bottoms. People, every single time the market starts to test resistance, it's so funny, anytime, whether it's on a 5-minute chart or a daily chart, anytime the market goes to test resistance, all of a sudden you got people on Twitter tweeting at you, hey, is this a double top? Is this a double top? I don't know if it's a double top. It's the break of the end of the range that would validate that. Otherwise, every time it comes into resistance, you're going to start calling a double top and you're going to get slapped around. Every time it comes into support, you'll do the same thing. So just keep that in mind. And again, just for everyone in the room, I'm sure other people get same type of tendencies here. Matt says all the talking heads were saying it. It was a head and shoulders. LOL. Oops. See, I mean, I didn't even read your comment before I was making those remarks. Yeah, and that's why you want to keep your head, or you want to keep your ears really, your eyes just focused on the market and shut your ears down, because a lot of times these guys don't have any clue what they're talking about. 87 is probably support. Yeah, Matt, I would say in the 87 region, I would extend it into the monthly open. So the monthly open, we're back on the daily chart. Yeah, the monthly open actually comes in at 86.90. Okay, so just, leave room for a drop into that former support right here. Maybe that's too big of a range right here. If it's going to hold, if the breakout's legit, that's where I would want to see first initial support. Make sense? So Matt, that's Euro Pound number 12. Euro Aussie and Euro Kiwi. Okay, thanks. Lesson learned. Painfully, but nonetheless. Haha. Matt, cheers on that. Feel better, by the way. Yeah, thank you, sir. D, Euro Kiwi. I'm not going to leave without showing it to you. Euro Oz, I'm just going to touch really quick, guys, because we are over on time. Euro Oz, still same mentality. I've been frustrated with it. I haven't touched it this week at all. But interestingly enough, outside day reversal, off support, in my mind, is in fact constructive. So I'm going to just throw here's the monthly open. I do like the upside. I haven't taken any positions on it just yet. I do also want to note that this does, near term, it does suggest, at least to me, a break of the initial weekly opening range. We're sitting right there as support right now. Remember, game plan remains unchanged. If we pop through 47.67, to me, that's the onset of the continuation. I'd like to trade alongside of Euro Oz. That being said, looking to buy pullbacks well above this trend line. I know it's a far away from where we are right now. It is a wider range ATR, but it's been a hard trade to get excited about, and I want to see some more constructive price action, specifically a break above 47.67 to get this thing going. Just a pivot in price, but also that former median line support now serving as resistance. All right. So I hope that helps on that, D, or whoever Euro Oz was for. Do wants to look at Euro Kiwi. A quick glance at Euro Kiwi before we wrap up the session, and that would be number 14 for the day. Looks like this. Just hit resistance at 156.47, okay? That was the 100% extension off the low. Really clean, nice level of resistance. Big stuff here. You got the 100-day moving average. You got the 100% extension and the highs from August, all lined up right at this 56.50 level. Expect some pullback from here, but I do like the long side of the trade still, okay? At this point, we're going to bring up our bullish invalidation level from 152.89. We're going to go ahead and bring that up to former slopes resistance. That same key barrier of resistance, 154.63 into 154.76. This retracement's null and void. And these are levels I'd be working with moving forward here on Euro Key. Momentum finding, or at least probing into 60. So wouldn't be surprised to see some back and fill. I like the long side above 54.63. Near term, here's what the scalp looks like. And again, this retracement null and void now. This extension null and void now. And just highlighting this near-term resistance target that we talked about yesterday. Not a bad play. Not a bad play. Conwell says, Michael, your levels and advice are worthy. Thank you. I appreciate that. Conwell, Eileen says, have a fun day today. Go Kiwi. It needs it needs a cheer squad, so let's cheer. Cheers, Eileen. All right, guys, we'll wrap it up here. Okay, thanks for the Euro Aussie. I'm out already, but still have faith in it. Wes, me too, man. The outside reversal day yesterday it was encouraging, and I do want to see that start to follow through before I get too aggressive on the long side, but watch that 47.67 break to the upside. D says, okay, thanks, hope you feel better tomorrow. Appreciate that. To everyone in the room, best of luck trading, and I'll see you tomorrow. Quick reminder, Jamie will be on tap at 1 p.m. Eastern today for his midweek strategy webinar, so don't miss that. All right, cheers.